Martin from Sept, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at the market, what happened during the day, and also see what we can learn and plan for a better trade for the next day. So we had a volatile market today, right? It went up and down, V-shaped moves, and then it's basically lost the momentum. Let's get into the details and see what exactly happened. So as we see, there's a weekly charts. We have 2 more days for the weeks to finish, and this nifty that you see, the resisting below the trend line channel, and bank nifty already broken out of that trend line resistance. And if we come down to the daily chart, which we are more concerned on this daily analysis, what we see here is kind of a small body spinning top. The spinning top is more relevant if it is the top of a rally. This is not exactly on the top, so it may not be applicable. So whenever there is a spinning top that's coming in the top followed with good volumes, it could indicate a big crash that can come in, right? But here it may not be as relevant as I mentioned earlier. It is not on the exactly on the top. It's on a retracement path is where this spinning top is come. And small body anywhere indicates the wick size on both indicates the volatility. That is bank nifty that you are seeing. The nifty also is a spinning top, and you can see that it has closed below, losing 0.55, that is nearly 98 points, and 265 points is what we lost in bank nifty, that is 0.64. So 0.5% or more of the loss is what has happened today. So basically it was very highly volatile ahead of the Fed interest rate news that's supposed to come tonight in the US. So anticipating that, people have been taking positions and unwinding and short covering, and all these things are happening, and that's the reason why the volatility has happened. Let's get into more specific details if something is there. Intraday it was very volatile, as we can see. It was V-shaped moves. Initially it lost around 0.7 in nifty and 1.5% in the bank nifty, and recovered almost all of that. But then after the 2 p.m. it again came down and then lost half of what it was gained. So finally ending up 0.5% of loss in both indices. At the double top pattern can still be seen on the nifty, right? It's possible, so you'll have to be cautious about that. That's not changed. 20-day moving support was breached intraday for the nifty, but it retained that and closed above it. And trend line channel, we spoke about that. We have 2 more days for the weekly candle to see if that's going to close above as a green, or is it going to remain inside, or is it going to remain inside below the previous candle's high. So all these questions will be answered by Friday, right? So if that happens, inside closure below the previous red candle on a weekly basis will indicate that it may be beginning of a downtrend, right? At least a consolidation is confirmed as of now. Looking at the Bollinger Bands, it's clear contraction and sideways move. Bank nifty is not showing contraction on the upside, but downside contraction has happened. Upsides trying to expand, and then it's indicating that the price move is more bullish on bank nifty. Support resistance level, if you see, it's 17,992 resistance, previous swing high, and 18,915 previous swing resistance. So we lose resistance on the upside, and 17,677 is a gap support on the downside for the nifty, and 17,380 and 17,430, that band is where the support is there, which is a gap as well as a previous swing low. That's what supports for the nifty. Bank nifty, if you see, 41,840 is the first resistance, which is an all-time high that was created a few days back, and 42,000 holding number would be the resistance above that. Downside, the support is 48,89 would be a support, previous swing low, and then 40,500 is a previous swing low. So 2 supports on the downside that we have to watch tomorrow's expiry. Volatility bands, we already discussed the Bollinger Bands. So momentum is also remaining the same. It is nifty and bank nifty has lost momentum today, but bank nifty, the momentum remains in the bullish zones, but nifty has already slipped in the sideways and then it is falling further down. And there is a bearish divergence which could indicate the market may fall, the bank nifty may fall if it works. It is actually in progress. It has already started working out, right? we can see that the price is moving down and moving up, and the momentum is moving down, right? So it's a divergence in the bank nifty that we can clearly see. It's not seen on the nifty, right? This is bearish divergence that we can see. So that is a caution of some bearishness that may come in. And move ahead, the trend is also remaining as it is yesterday. The nifty has gone to the bearish zones and the falling. Bank Nifty was maintaining the bullish zone, but it is also falling in the strength of the trend. So it's a ADX indicator that we are talking about, and from the moment we are talking about the RSI. India VIX has spiked again 3% and 90.3, very close to V20, and you have to be cautious about that. Look at the open interest analysis. The futures OI is showing short build up in the Nifty and long unwinding for the Bank Nifty. Both are bearish indicators. Options OI is showing a level of 17,500 and 18,000 for tomorrow's expiry, and 40,000 and 43,000. That's crazy. That's a 3,000 points of uncertainty is what the option writers and are seeing that for the September 26th week expiry tomorrow. Right. So Bank Nifty is just 500 points of uncertainty. So Bank Nifty, there is something that the option writers are looking forward to. Put call ratios was very bullish yesterday, near to the 1 plus. Now it is 0.7584, not bullish enough, but neither is it bearish. That's what PCR put call ratio is saying. So OI is mostly bearish indication is what it is giving. VIX is not cold off really good. It is spiked up actually, so it is getting closer once again to the 20. Momentum is also not good for the Nifty, and falling in strength for the Bank Nifty also, even though it's maintaining. So overall bearishness, still all the parameters that we have seen so far. Sectorial, what happened today is FMCG performed, metal pharma, realty underperformed. FMCG alone is the only sector in the major sectors that is showing short-term bullishness from the momentum perspective. IT is short-term bearishness from the momentum perspective. Heavyweights in TCS, HDFC and Kodak Bank all underperformed, and others are all flat. HDFC Bank, HDFC Bank, and other two stocks, only two stocks, heavyweights, 5, 6, 8 weights that we have, that is maintaining the bullish momentum in the short-term daily charts. In FI and TCS in the bear zones, bearish momentum is what we are seeing for these two. Stay away from that. Institutional buying and selling this today. Fyers is selling its small quantity but less than 500 crores in the cash, and DS are buying a similar amount, 538 crores in the cash market. Institutions have not Fyers was starting to buy yesterday, but today they have sold, but probably less. So hope the sell mode does not come back. Institutional support has been okay for the last 2 months at least. Crude oil is rising, but it is still near the 85-86 points. Basically it's at the bottom of a trend line parallel channel, and it's consolidating at that place. It's cooled off quite a lot considering the 120 kind of levels few months back that we had. The real concern is the dollar index in USD INR. Euro index is rising up and making 20-year all-time high levels. It's 110.6 is what we have today, and USD INR currency pair is having a rising momentum as well, and it is hit the 80 levels today. So this is the real concern for the markets as well. Gold is rising up after it has fallen down and from a major support to another major support. So it's consolidating. Basically momentum is bearish momentum is what we have with gold. SGC is red and US indices is also seeing some green, but both these indices we'll have to see what happens, how the markets reacts tomorrow morning when our market opens pre-market, right? That's when you get the true picture. Until then it may be moving up and down. So this is some US indices is something that we have to keenly watch today what happens. It's a very crucial point. It's on a bearish momentum and at the bottom of a long trend line channel from 2020, and that has almost got breached, and today would be the day we'll come to know whether it's US indices, especially the Dow Jones and the S&P 500, whether it's able to hold that trend line channel, or is it going to go to the next support zone down near 29,000 in the Dow. So that has to be closely watched. We have big movements that happens there. Obviously our market is most likely to react, although it has been ignoring and correcting only less, and then every time a correction, a bounce up happens in our markets. So that resilience is there, but will that be there after the Fed outcome comes tomorrow or not is something that we cannot predict. So the major event is interest rate risk that's coming tonight, and also some exchange guidance information also could impact the nifty IT tomorrow. So the two events that you can look for. So volatile expiry day tomorrow, so that adds up to the volatility. Stock picks ITC is long and Pyramid Enterprises the short position. ITC has been doing well. FMC is only stock that has got bullish momentum on the short term, and ITC has been really breaking out from a cup in hand, from a cup pattern, rounding pattern, and then it is really moving up. Right. From 200 levels, it has shot up to 350 nearby levels, 340 plus test is where it has tested today. So good momentum and good breakout with momentum and trend is what you can see. Let's quickly see that charts just to make. Right, so it's a weekly entry as made a long time frame. This may be swing opportunities primarily. Tight stop loss in the neckline has to be done. Pyramid is also having a moment when the trend that is going to the bear zones, crossover of the trend and the momentum bearishness is evident. It is a head and shoulder pattern that may break out and can give big moves on the downside, right? So it may be worth watching that breakout happens or not. Breakdown basically happens on the pyramid or not. Having said all that, September 22 tomorrow, expiry day Thursday. Market view for me remains mild bearishness. Looking at the patterns, looking at the FI selling that happened today, PCR, the event outcome, falling momentum, trend crossover, M pattern, trend line resistance, Bollinger Bands, all these indicate that there will be some mild bearishness that could be there tomorrow. But no, that could totally be, the Fed dependent on the Fed event outcome. It's an event day tomorrow, so technical predictions may not work out. Market went volatile basically today and lost the momentum. Is what happened. It's indecisive, small body, is what you see on the both indices because of the uncertainties that is already there. VIX is there, expiry is there, Fed event outcome is there. So that's why we have the candle formation in that. But we are not yet ready to fall down or crash down. So that may come when it is days expected. So basically for tomorrow's play, you'll have to watch the 17,500 level and 17,800 on the upside. Right, views might be bearish as I said before. I hope this helps you to frame your market view and the trade plan for the next day. If that helps you some way, consider hitting the like button and then share to maximum, and then if you subscribe if you're not subscribed, because we have very few subscriptions and I appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye bye.